We've seen how to break a level and how to re-enter after an overshoot, but not every entry makes sense at every moment. A breakout in a sideways market is often a fakeout. Let's see how ER, the Kaufman filter, figures out if the market's trending or ranging and how we use it with Donchian. ER doesn't decide buy or sell. It decides whether it's the right moment to even let a trend strategy like Donchian try to enter. As always, experimental software, not financial advice. Capital loss is a real risk. Backtest and live aren't the same thing. ER compares price's net move against the total ground it covered getting there. Straight line, the two nearly match, implies close to 1, clean trend. Back and forth, the ground covered dwarfs the net move, implies close to 0, sideways. ER doesn't look at where you ended up, it looks at how much you circled around getting there. ER doesn't pick long or short. It decides whether the strategy is allowed to enter at all. Above the trend threshold means trending market. Donchian's good to go. Below the sideways threshold, blocked. This is where Bollinger reversal would make more sense. Between the two, a gray zone. ER doesn't say if price goes up or down. It just says whether the strategy you're using fits the moment. Enable turns the whole thing on or off. Calculation time frame. Same as the strategy or a dedicated one. Trade at 5 minutes. Read the regime at 15 minutes. Period. Higher, slower and steadier. Lower, jumpier. Trend and sideways thresholds. Sideways always lower than trend, gray zone in between. Allow gray zone. If on, keeps the last clear regime instead of blocking everything. The period decides how fast ER changes its mind. The thresholds decide how sure it needs to be before saying so.